Whether you like it or not, it's time to start thinking about taxes, but I'm going to give you 3 steps to make this tax season enjoyable. Can we say that? Can we make tax season enjoyable? We can at least make it easier. Step 1 is gather your documents. What are you looking for? Where do you get them? And when can you expect them? So we're looking for anything that comes in the mail in an envelope that says tax return documents enclosed. This would be things like 1099s, W-2s, 1098s, or any one of those numbers letter combinations that you get from employers and banks and investment agencies. You may already have started getting some of these in the mail. Most of them, though, are going to start coming at the end of January and even into February. If you get brokerage statements from investment firms, those are going to come even later, so be on the lookout for those. But not everything comes in the mail anymore. Now, with so much stuff being online, a lot of those tax documents are actually going to be in your online accounts. You may have gotten an email that's buried somewhere that says your tax documents are ready from places like E-Trade or Fidelity. You're going to need to log into those places to find those tax documents. Things like Robinhood or Acorn or any of those other investment apps that you use, you're going to have to go into the app to find those tax documents. So make sure that you're thinking about all the places that you have money and that you get money that you might have a tax document for that you're going to need to find. If you're not sure the kinds of things to even look for, look at your tax return from last year, the last one that you filed, to see what was on there. That might give you some insights. But here's one big pro tip. If you just really want to know everything that was reported for you from anyone else to the IRS, you can go to the IRS's website and get a transcript of everything that the IRS knows about you. So anytime a business or an entity files a 1099 or a W-2, they don't just send it to you, they send it to the IRS as well. And you can go to the IRS website, you can create a secure account, and you can request a copy of everything that was reported to the IRS for you so that you know what the IRS knows. Getting that transcript does a couple of things for you. First, it tells you what to look for and what types of forms you should be getting. Also, it's a really good security measure. If you see things on there that just don't make sense to you, then it could indicate identity theft and it's something to look into. So again, step 1, get your tax documents, put them in a pile somewhere. Step 2, you want to check your numbers. These are 3 mistakes that I see as it relates to tax documents received and not putting things in the right place or the right way on your tax return. The first is double counting income. If you receive a 1099 for business income, whether it's from somebody you did editing work or other kind of services for, or maybe it's even for royalty income from book sales, you might already be counting that income in your bookkeeping. So if you're keeping track of your business records and you're keeping track of your income and expenses, and you've already recorded that as income, then on your QuickBooks or on your P&L, you're going to have total income. You're going to give that to your tax preparer. You're going to put that into TurboTax, whatever software you use, and that income is going to be taxed. If you turn around and take that 1099 that you got for that same income that's already being reported in QuickBooks or on your bookkeeping, and you put that into your tax software, it might pick that 1099 up as additional income and you end up getting taxed twice on the same income. So make sure if you get a 1099 for something that's already being tracked in your records and you're already reporting it on your tax return, that you don't report it twice. The next mistake that I see is royalties being treated as royalties. What does that even mean? So if you get a 1099 for royalties for book sales, it's going to show as royalties on that 1099. If you put that 1099 into TurboTax or other tax software as royalties, it's going to be treated as royalties for tax purposes. Why is that bad? Sounds like that's the way it should happen. The IRS, though, is extremely clear. If you are a self-employed writer and you're in the business of writing books and receiving money for those books, then you have to treat royalty income as business income and report it on Schedule C with your other business income and expenses, not as royalty income on Schedule E, which is usually where royalties would go. If you report your royalty income incorrectly, it's going to cause mistakes on your tax return. You'll either be over or underpaying on your taxes, but either way, it's going to be wrong. So make sure that if you're receiving 1099s for royalties, first, double check that you haven't already included that in your bookkeeping. And second, make sure that it's not being picked up as royalty income on your tax return, and instead it's being picked up as self-employed business income. The third is just having missing information, not knowing what you should be receiving and only submitting or only using what you think you should have. So again, this goes back to the tip from step 1. Check your IRS transcript if you're just not sure what you should have and see what they know, because that should be everything that was reported on your behalf. Okay, so you have everything you need. You're fairly certain that the numbers are right and you know what to do with them. Next step is to make a plan for filing. What does that even mean, to make a plan for filing? If you're the kind of person that wants to make sure that you're filing by April 15th and you don't want to file an extension, then you're going to need to account for the time it's going to take to prepare your tax return. If you use a tax preparer, you're going to have to check with them on what their turnaround time is. You probably can't submit your information on April 1st and expect to have a tax return back to you by April 15th. And even if you're doing your own taxes, it's going to take you time to go through the questions and make sure everything is right. So make sure you're giving yourself plenty of time. Now, what about extensions? And why would you want to get an extension? There's actually some benefits to filing an extension. If you extend your tax return, you basically file a form with the IRS saying, I would like to have 6 more months to file my taxes. And if you do, then you get 6 more months. Now, the benefits of filing an extension are that whenever you file your personal tax return by October 15th, you have the benefit of having almost this entire year finished. And now you can look back with hindsight and see what would have been the most beneficial way to report things for the previous tax year, assuming that you have leeway to do that. We're not talking about tax fraud here and moving things between years. We're talking about certain elections that you can make that might make more sense based on where you are this year. Also, in 2025, a new tax law was passed towards the end of the year. So for all of 2025, we actually didn't know what the tax law was going to be for 2025. If you filed your tax return early in 2025 for 2024, then you did that not even knowing what the tax law was going to be for the next several months. So if you got an extension last year to file your taxes and you filed your taxes closer to September, October, then you might have had a better idea of what the tax laws were going to be in the current year, and you could have made decisions on your 2024 taxes based on that knowledge. So an extension is actually not a bad thing. It could work in your favor. But there's one caveat to remember. An extension of time to file is not an extension of time to pay your taxes. You still have to pay your taxes by April 15th, or an estimate of what you think you might owe. And then whenever you do finally file your tax return, then you just pay the difference or pay what you would have owed, or you get back the refund if you paid too much. If you don't pay whenever you file your extension and you do end up owing taxes, then you're going to have late payment penalties. Another mistake I do see with people getting extensions is they stop paying their quarterly taxes for the coming tax year. So let's think about it. We're in 2026. If you get an extension of time to file on April 15th, and so now you can file by October 15th, your first quarter estimated payment for 2026 for the taxes that you're going to file next year is due April 15th. Then second quarter is due June 15th, and so on. Well, if you're not filing your 2025 tax return until October 15th, you might go almost the whole year without making any estimated payments for next year's taxes, and now you're behind. So make sure that even if you get an extension to file your tax return for 2025, that you're still preparing for your 2026 taxes. So just to recap, make things a little easier, gather your documents. Step 2, make sure that they're correct as much as you can tell. And step 3, make a plan for when and how you're going to file your taxes. If you want an opportunity to talk to CPA about your tax questions or to ask other authors what they're doing with their businesses, check out the link in the description to Author Unlimited. It is our community specifically for authors, specifically about finance and systems and growing your author business. It's a great way to get the help you need for a lot less than paying for like a one-on-one consult. Hopefully this was helpful. If you have any questions, let me know and I will see you next time.